Continuing on with our Gamerscape example, we're going to look at first in, first out, or FIFO. So FIFO assumes that inventory items are sold in the order that they are acquired. So when sales occur, the cost of the earliest units acquired are going to be charged to the cost of goods sold. Using this method, Gamerscape will assume that all 100 units in its ending inventory were purchased on October 10th, and the ending value of inventory and cost of goods sold can be determined down below. So we can do this two ways. We could start with cost of goods sold, or we could start with ending inventory. Since we started with ending inventory on a specific identification, let's go ahead and start with cost of goods sold on this one. Now remember, we sold 350 units and we have 100 units in our ending inventory. So in first in, first out, we assume that the beginning inventory is the first that's sold. So we sold all 100 units because obviously we're not at 100 or 350 here yet. And we're going to go ahead and watch as this moves to our 350. Okay. So we've got 100 units so far that we purchased at 14 a piece. So it's 100 times 14. We've got that total cost from that beginning inventory. If I add in the 150 from the April 10th purchase, we're still not at 350. Okay. We've got $16 a piece that we purchased those at. So 150 times 16. We've got 2,400 in total cost from that purchase. Now I need to determine out of this October 10th purchase how many more units I actually sold to get to the 350. So we know 250 plus 100 is going to equal 350. So we sold 100 units out of that October 10th purchase. 100 units that had been purchased at 17 a piece. So we're going to take the 100 times 17. We're going to get 1,700 here. And then the remaining 100 are going to be in our ending inventory. Those that we bought at 17 a piece, 100 times 17. Here we go here. Okay, so our total cost for our cost of goods sold is going to be the sum of all of these. Well, sorry, I got to put this through this. I might do it a little bit old school. I'm sure there are shorter ways to do that in Excel. So we're going to go ahead there, and we've got 5,500 for our total cost for cost of goods sold. As far as the total ending inventory, the cost of it, this through this, which we know is 1,700. So a couple other things that we could do. We could, again, remember that our cost of goods available for sale equals cost of goods sold plus ending inventory. So if I knew one, I could determine the other based on that information as well, kind of like we did in the specific identification. So you can either set it up where you go through each line, or you can determine one of these numbers and determine the other one based on that.